This is a market review for February 12th, 2025. Today is a Wednesday. We had a CPI today, as well as Powell speaking at 10 and Trump tentatively speaking at some point today. So from a news standpoint, I was 100% hands off. As you can see here on the daily candle, we did close bullish. We had this huge sell side wick though, and that was caused by CPI. But throughout the day, we recovered from that and closed bullish. 1 hour. Um, so as you can see here, if we look Asia to London, it'll be easier to see on the 15-minute, so I'm not going to talk about it now. However, CPI ripped down, tapped constant encroachment, and the market opened, and we just were basically playing catch up all day. Took out this low, didn't get to there, I believe. Well, we tapped constant encroachment of not this month's new week opening gap, but we did reach this week's new week opening gap. As far as that goes, that's that. This hourly here looks like it was used as an inverse with these wicks here. Now in the 15-minute time frame, you can see what I was trying to point out better. Look, 2 a.m. to 7 a.m. So, what did I see between 2 o'clock and 7? In my opinion, we're moving bearish here, right? Boom, so price retraces, continues the bearish move, and reverses, taking out this high. Bang. So I wanted New York to continue it, right? And it did. It did still end up playing that way. However, with this big extension here, and I saw price start to round at 8-ish, I was expecting a retrace because it's unlikely for price to just straight continue London's move. There's got to be some sort of retrace. So I was looking at this inverse fair value gap here, which was validated on the sell side with this reaction there. But then CPI had other options. Oh, geez, sorry. Geez. Yeah, CPI absolutely ripped us down. Constant encroachment, and then reversed up. Retraced around the macro. Another expansion up. Reversal around 11. This is London close once again. Retraces. There's a 5-minute you can see on that. I'm going to go to a lower time frame. And then lunch, since we just took out sell side, and we have been playing bearish for the past half an hour, we counter that, right? So we have been playing bearish, which means sell side or sells have been profitable. So we play the opposite of that. We play buy side for lunch. Lunch comes up, new day opening gap. I might just get rid of all these new day opening gaps because I honestly rarely even use them nowadays. Price reacts off them, yes, but in my opinion, it's more accurate to find a draw on liquidity that is based off of liquidity and not other things inside price. 5-minute fair value gap, we'll see that on the lower time frame as well. SMT of these lows, which you'll also see on the lower time frame, and then price continues its bullish move. 5-minute, more of the same. Bearish move, reverses, retrace, CPI. New week opening gap, constant encroachment, expansion upwards from market open, retrace, 5-minute closures are almost perfect, retraced around the macro too, another expansion upwards. I hit once, retrace, try once more. Oop, 11 o'clock. So we start reversing. Hit this 5-minute fair value gap, which is internal liquidity taken, which means sell side is profitable. So lunch reverses that. Also, it's below equilibrium. So a valid retrace here, which means a bullish expansion is to be expected. So lunch expands up, and then algorithm kicks back in. So it comes down to take sell side before continuing upwards. We have an SMT of these lows, meaning ES made a lower low here, and NQ didn't. So that signals that price is going to rally, and it does. And then we enter the last hour of trading where price seeks the sell side but fails, and then meanders off till close. Now, here's the 1 minute, and here's the thing. I've been thinking recently, my model works, right? It works, but I don't like how often or how not often I am taking trades. Now, this week is 100% due to news, right? Even if I had 100 models for every situation, I wouldn't trade today because of Powell. But I do believe that there are models that work better in different situations. And my model of a sell side, of an SMT, and then an expansion, and then a rebalance of an imbalance takes too much time, right? It takes too much time. So what I'm going to try to do from now on is see whether price is moving in the direction it already needs to, so I can just hop in the train instead of waiting for a retrace that'll never happen. For example, here, we hit this low, reacted, low again. I believe these lows are the same on ES. Let's see. Yep, 906 lower than 830. Yep, 906 lower than 830. All right. So what does this tell me? In my opinion, since I have my bias, right? Since London continued the bearish move and then reversed, playing bullish, regardless of what CPI did to the market, I think we're going to continue that. And so once I see price start to rally here after taking out this liquidity, boom, that is the new low. So as soon as I see price fill in this fair value gap, and hey, even if I want to play the expansion, boom, expansion comes down to the order block, right? We're playing bullish, market opens, bias is bullish. Why, entering in this fair value gap could be valid, especially with this SMT here. Just something for me to think about. So bullish expansion, retrace around the macro, 5-minute fair value gap reaction, order block reaction here. Expansion again, high, made a new high, tried once more, failed. It's around 11, so it's time to reverse. No trades to be taken here, no imbalance there. Consequent encroachment of this 5-minute here for lunch. Again, internal liquidity taken before lunch. Sell side has been profitable before lunch. This is a valid retrace past equilibrium. We can expect a bullish expansion. Now, here's another thing. If I was experienced enough and watching the charts at the time, because I wasn't because I was in class, this could have been a trade. I could have seen 5-minute fair value gap, retrace below equilibrium, bullish bias on the day, bullish expansion. So could have hopped in this, rode that up above this high power. I don't think it's called the power of three. Three drives, I think you called it. One drive here, two drive here, three. Time for a retrace. Algorithm kicks back in. If we want to continue our bullish price action in PM session, it is likely to take out sell side before doing that. Kind of like this. We took out sell side before playing bullish, right? So I expect a sweep of sell side before playing bullish in PM as well. We get an SMT, which is perfectly fine for me because ES made this low. And an SMT in my mind makes this a safe low. Now, with that, there are many things that could have been taken here, none that I would have liked or felt comfortable with. Inverse fair value gap here expanded. It wasn't validated, so I don't have the most faith in it. But inverse fair value gap. Oops, wrong one. Inverse fair value gap right there. Boom. Number one possibility. Two. Boom. Low. High. Order block here. Enter there, right? Or order block here. Enter here or here. And for all of those, inverse fair value gap, stop loss below this low, order block here, stop loss at least at consequent encroachment of this candle wick there. This order block, I don't really know, honestly, below this low, probably. We get that expansion, taking out this high, failing to get this one. Last hour of trading looks for any untouched liquidity. We had lower for that, failed to get it. I don't think ES made this low either. Nope, it did not. 350 low didn't break this 2 o'clock low. So no SMT here. Price reverses from there, continuing the bullish move of the day. Now, as far as the rest of the week goes, I'm looking bullish. Right, we have Thursday and Friday. We have PPI on Thursday and some other news, I believe. And I don't know about Friday. However, this is where we are on the week. We're bullish. Now, this looks extremely bullish. So, what does this tell you? We had a discount opening, which in my mind is the same as one of these wicks, right? We played extremely bullish on Monday, small candle day, small candle day. Tomorrow I'm looking for a huge expansion. We've retraced basically all the work we did on Monday, so I'm looking for an expansion. Definitely above this high. Looking for another big-bodied candle, which means, in my opinion, I would like the sell side wick. Possible point is consequent encroachment of this. Boom, hits that, and then we expand bullish. So I'm looking for consequent encroachment of that wick to be hit tonight, either in Asian or London session, and then to play bullish tomorrow for New York session. Again, playing around news. PPI comes out at 8:30, so that means I will be looking to trade at market open, but I will be cautious. I'll be observing price, looking for different characteristics and different types of price action that would warrant a different strategy than the one that I have. And of course, if I see something that matches my strategy, I will take it. But that's just what I'm looking for going into the next couple of days, if you want to keep your eyes out for that. So This has been your market review for February 12th, 2025.